We are in a financial crisis, whether you realize it yet or not. Banks are collapsing and hyperinflation is right around the corner. And we're going to look at some of the data pointing to hyperinflation and, of course, what you can do to protect yourself. So let's go straight into it now. Now, what exactly is going on with this banking crisis? Well, a real brief explanation is that basically the banks were buying government bonds in 2020 and 2021. They were buying a lot of government bonds, and now the Fed has been hiking interest rates for the past year, which has eroded the value of those bonds. And so they're worth way less. Their market value is worth way less than what the banks paid for them. So as you can see on this chart, unrealized losses on investment securities. This is the banks, and as you can see, they have huge unrealized losses, and this is from all those bonds they purchased back when interest rates were low, and now those bonds are worth way less. So they're way underwater on those bonds. So, all the banks combined, they have losses in the hundreds of billions, as you can see here, down to 700 billion in unrealized losses. So, this is exactly what happened with Silicon Valley Bank, why it collapsed. Same reason when depositors come to get their money, they don't have the money because they they bought bonds with it that aren't worth nearly as much as they used to be. So if they go to sell those bonds, they take a huge loss, and poof, the money's gone. So that's what's happening. And it's really similar to the FTX situation where Sam Bankman-Fried was listing their assets according to basically what they paid for their assets, the different cryptocurrencies, instead of their actual market value, what they could sell them for. And banks are actually doing the exact same thing right now, where on their balance sheet, they're listing these bonds and these assets as, what they paid for them instead of their market value. And so they're not listing them what they can actually sell them for. So they're making it look like they have the money, but if depositors all come to get their money, the money's not there. It's gone. The Fed has basically taken all the money by raising interest rates. So that's the huge crisis that's happening right now. And so basically, if everyone goes to get their money, the money's not there, banks go down. And the only way to stop this is the Fed creating more money. The Fed has to create more money. The Fed has to create more money because the money's gone. So that's what's happening. And if you look here, you can see the Fed's balance sheet, their total assets, and they were going down all year with the quantitative tightening. And then just this past week, we saw their assets went up 300 billion as they've been buying these government bonds from banks at their original value instead of their market value. So basically bailing out the banks. So that just created billions of dollars back into the markets. And so we've seen certain things pump off that. But so they created money there. And if you look here, the discount window borrowing reaches all-time high. So this is a graph of banks borrowing with the discount window. So borrowing directly from the Fed. And as you can see, back in 2008, boom, huge discount window borrowing. Some back in 2020. And then now we just see this line going straight up to an all-time high. So yeah, just this past week, banks, this is the lender of last resort. So when banks have no other way to get funds, they borrow with the discount window. And so that's what they've had to do just this past week. And so this basically creating a bunch of money and also a huge problem, because here's how it works. So depositors come to get their money. Bank doesn't have money, so they have to borrow from the Fed via the discount window. They take that, so they get a loan from the Fed, and then they give that money to the depositors to give them back their money. So now they have this loan to the Fed they have to pay back, but they no longer have the depositors' money that they can loan out and make money off of. So it really puts them in a bad situation. And so this is what's happening, as you can see, to a lot of banks. It's really, really just a way to buy a little time, but it doesn't really solve the problem. So yeah, there's that. And then also, this is crazy. The Federal Reserve is coming out. They announced their CBDC in July, the FedNow service. That's basically what the CBDC is going to be built on. So announcing the launch in July. So only a few months till we could see that CBDC coming. So pretty crazy stuff. So yeah, you don't really want to be trapped in dollars when the CBDC does come out, because once it's out, you may be trapped and you may not be able to exit that system, as they'll have total control over your finances at that point. So yeah, as you can see on these graphs, tons of money is being created to stop this crisis. And really, the banks they got screwed over by the Fed hiking rates so fast. And so basically, banks are dead. There's two options: either banks die or the Fed creates a bunch of new money to save the banks. And they created this new program, the BTFD program, to help out these banks, basically give them money. And it's estimated that could create up to $2 trillion of new money just with that program. So we may see an insane amount of money flooding or being created. So basically, they're trying to assure everyone that that everything's fine. Don't go get your money from the bank, to avoid the bank runs. Because if there's no bank runs, then they may not have to create as much money. Of course, if everyone goes to get their money out of the banks, then they have to create the money, because the money's not there, as you can see here. So either banks fail or they create a bunch of money. So that's why people are saying there's going to be hyperinflation, and there really very well could be. So this is basically like a financial crisis like 2008 all over again. This is really the sequel to that. And this one's going to be much worse already. You can see it's looking pretty bad. So so basically, there could be, most likely there's already hundreds of banks that are dead already. They're insolvent, and we just don't know it yet. So a few banks have failed already, but there's probably hundreds more that are already dead. We just don't know it. And if people go to get their money, it's not there, and the Fed's going to have to create more money. So that's why I think we could see hyperinflation in the next few months. And how can you protect yourself from this? Well, the best way would be to buy Bitcoin. Of course, gold and silver would be a good hedge as well, but I think Bitcoin is going to be by far the best way to protect yourself. As you can see, here's the Bitcoin chart. There's been a decoupling from the stock market. So if you look at the S&P 500, since this banking crisis started, it's just been going down. But if you look at Bitcoin, since the banking crisis started, it's gone up a lot. It's gone up like 50%. So reason that is because this is really the reason Bitcoin was created, was for this very reason. Bitcoin was created right after 2008, basically as a solution to the problems with banking. And so we're finally seeing another banking crisis, and Bitcoin will be put to the test to see if it can do what it was made to do. So far, it looks like it is. People are starting to buy Bitcoin as to save themselves from this hyperinflation. So, I mean, obviously, if there's hyperinflation and you're holding dollars, then you lose all your value. So that's why people are starting to hedge with Bitcoin. There's billionaires starting to buy Bitcoin to protect themselves. So we're seeing, even amongst all this fear and uncertainty, Bitcoin is just going up like crazy. So, and you've probably heard of Balaji. He made the bet that Bitcoin will hit $1 million in 90 days. And so we could see a graph like this where Bitcoin just suddenly goes straight up to $1 million if we do indeed see that hyperinflation. And so, yeah, this is Balaji. He made that bet. So he's betting $1 million Bitcoin will hit $1 million in 90 days. So he is convinced that we're going to see hyperinflation. And yeah, you should go on Twitter, read his whole post. Very interesting. Also, I would go he was interviewed on Pompliano's YouTube channel. I'd go watch that interview. Super interesting. So yeah, and then also check this out, Jim Cramer. If you wait until every bank resolution is completed, you will miss the big moves back up. So he's saying bank stocks are going to be going back up. And as you know, Jim Cramer, usually the opposite of what he says happens. So just another signal that banks are going to continue going down. Excuse me. I'm a bit sick. But yeah, so we may see a chart like this straight up. So if you want to protect yourself, buy Bitcoin, get your Bitcoin off of exchanges, get it in self-custody. That way you're in control, because once this CBDC does come out, they're going to have total control, and you may not be able to exit after that, because they will have control over what you can do with your money. So there you go. Banks are in massive trouble. We'll see if we do have hyperinflation here in the next few months. Bitcoin is a great way to protect yourself from that. And just like with FTX, when FTX happened, I had some money in FTX. And as soon as I heard rumors that they were insolvent, I immediately pulled my money out. And then the next day, what do you know? Withdrawals are frozen. Nobody can get their money out. And that whole time, Sam Bankman-Fried's saying, oh yeah, we're solvent. Funds are good. Nope. And now we're seeing the same thing with banks, where the Fed's saying, yep, everything's all good. Your money will be there, guaranteed. But there's rumors. I mean, we've already seen a few banks collapse. And, if you want to protect yourself, take your money out right away. Don't wait for a bank run and everybody else takes their money out and then you're left with nothing. Because nowadays with online banking, as soon as some news comes out, everyone can just hop on their computer or phone, transfer their money out in like less than a minute. So it can happen extremely fast. So I would take my money out of the bank as soon as possible, buy some Bitcoin, take it off of exchanges, hold it yourself. That's the best way to protect yourself. So here in the short term for Bitcoin, we've gone up a lot, but we did just break down from this rising wedge. So good chance we could come down, retest this previous resistance as support, retest this support down around 24,000 before heading higher. And then we'll see if eventually within the next few months the graph turns into this, where we just go straight up to $1 million. That'd be pretty sweet. So, well, sweet for Bitcoin, probably be pretty rough for the rest of the world, if the banking system collapsed. But let me know what you guys think. Thanks for watching. Make sure you buy some Bitcoin. I'll see y'all later.